FXBros.
Bros. What's poppin', everybody? We're back for another live. I'm going over this Australian dollar market. See, it's been creeping up these past few weeks. Basically feeling this clean traffic we had from Thursday, March 21st. That's what we experienced in that run up on Wednesday morning, pretty much into Thursday morning. We didn't take out any highs for structure to confirm the bulls. We're looking for a price to reach up here past 66.50 or 66.60 area, which it didn't. It turned around abruptly on what was that, Thursday afternoon. Started selling off. Didn't get any super strong signals to sell off, but we did get this nice rejection. I don't know if Thursday at 2 o'clock, I don't know if we had a Fed speech around that time. I know usually we do, but that could have been the cause for this sell-off and the continuation later on in the evening for the Asian session. Then later on Friday morning, we see New York pretty much swept the high of Asian by a pip, by half a pip, and furthermore confirmed that sell-off. Even though it's Friday, the market was losing steam and kind of settled within that price zone of was it 65.86 and 65.63. Sounds like a 20 pip range. So that's pretty much where we are right now. Until we break this low, we do have clean traffic to fill, and targets would be at least around, I would say, a smooth 65.10. And if it plays around there and breaks through, which just for even numbers, we probably gonna break through 65 flat and continue back into the 64s if we break all the way down here. But first, we got to break through this strong support with all these rejection wicks. Even if we get below this open close, these bodies, there'll be even more confirmation if we can close below these wicks to continue and sell off. Probably a nice retest up in the here and then add more sales to continue if we get that type of play out. Otherwise, we're going to reject this area, and probably on this next hour, we'll see some bullish push back up into these wicks right here, which is 65.68. So we probably get price action push back up into this level, which is really not far from that. It's like, 5 pips away. Anyway, so that's nothing. But let's see how we did. This is the first month of the second quarter. So let's look at the first week. Nice strong bullish week. What did the week do? Well, we reached up into these highs to tease at a potential of us breaking these highs, but we didn't. What we did do is close above the previous week's wick and this little open and close scenario we have here on the weekly at 65.60. We actually closed all the way up here at 65.78 with a high of almost 66.20. Came right at 66.18. The market could potentially settle off right here where we have this open and close. Matching up with this area, this pretty much that we have this rejection with right here. So we could see a nice little settling off here on a weekly, and then a continuation bullish, and then sweep above these highs like we were probably expecting last week. So let's get our weekly zone, our 50% level of the previous week right quick. Get the favorite trades right here. We just do this just for good measure. It's not really a strong tool I use, but still kind of let me know where we at on a weekly basis without looking at the weekly. Check that out. So that's our previous weekly zone for last week, this bullish push we saw. Let's see what the daily looks like in reference to this open and close area, and then we get this other open and close scenario right here with this rejection wick on this weekly. Let's see how the market reacts here on the daily. That's good. What's up, brother?
What's happening, man? How you doing?
I'm good. How are you?
Doing good, man. It's a Sunday.
That's what's up.
Way back at it.
That's what's up. So, looking at the daily, it says a lot more. I would, we got every right to come all the way down here and fill in this gap, fill in this slightly clean traffic. We could, but it's kind of really like it is with any forward, future trading. It's best to see what the next day gonna do. So we got to see what this daily is gonna close like. Are we gonna get a bodily close below here? Who knows? But if we look on the smaller time frame, we might get a signal to get in on that move before it happens. Possibly later tonight, maybe sometime in the morning, because this daily candle don't close until tomorrow at 4 o'clock, 4 or 5 o'clock, depending on your time zone. So, got a whole lot of time to determine what this daily candle can do. I don't know. The Bulls had a nice, strong fight last week. Judging out this rejection wick, I don't think they gave up yet. So this candle and the rest of the candles for this week got a lot to prove to see if the Bears are going to continue with this kind of trend, because we tested up in these areas up here Thursday. Couldn't close above here, but it did. The price did run up to 620 almost. But like I said, it can close above these wicks, but nonetheless, we have to see what this week is going to do. Judging out the weekly, like I said, we are in the first week close of the second quarter. It's a nice bullish week. Close above this week. Close above all this open and close on this open and close reversal. I don't know. The Bulls is showing their power right now, so the Bears gonna have to break some strong support zones on the smaller time frame and respect them. Like, don't just break through them and fake out like this. We need breakthroughs and continuations. So who knows? So far, I'm leaning on to see what the Bulls gonna do.
I agree, man. I agree on the same, bias as far as like looking for the bullish opportunities, but I also agree with you saying who knows what the market is going to do. So,
Facts.
but yeah, that is the bias. I'm with that.
Just judging off how the candle's been closing, I would say
correctly
that the Bulls still got a lot of power in the game.
Yeah.
Drop down to the 4 hour. Not much has happened from the bears after that run up on Wednesday and a Thursday that we experienced. Taking out this little minor structure here. We didn't take out the major structure over here. But we did finally break above this little consolidated structure right here. And after we started to sell off, we kind of ran into this little consolidation range right here. Like even though the market sold all the way down here, kind of had a slight indecision. Then we broke back down, broke back into this old price, broke way lower, then broke back into this old price, hesitated right around this old price, and now we broke back below. So who knows if we're going to continue or we're going to break back into this area and continue higher, and this will be our bullish structure that we'll be looking for. Other than that, we should see a break below this and targets probably down here to 65.20 or even as low as 65 flat just to be safe. I feel strongly if we do test around this, anything below 65.20 and start to see some closes below that area, I do feel like the market has every right to go to that even number, psychological number of 65 flat, just for that extra 20 pips. You know, if you want to hold out. Like I said, we gotta wait for something to happen up here before any of the scenario plays out. It'll show the 1 hour. Not gonna show us too much different. Only thing that stands out from that whole scenario, even though we did have, like I said, starting off, because we were talking about the market last week on Sunday, probably expecting this turnaround from this support to continue bullish. And we did get some trend-ish continuation, but it wasn't. It was weak. It barely ran up this whole clean traffic and also this. And it took into Sunday, Monday, Tuesday morning. That's when we got the rejection. And it could have turned around and continued here, but we got confirmation on that rejection here Tuesday night around the Asian session. Started the Asian session. I would say one key thing to look at on this run up, especially on this morning for Tuesday, London took it higher above the Asian highs right here, pre-NYC, and we didn't get a continuation. Like we should have bounced off of here with this strong like rejection, kind of rejection here, even though we had this like fake out scenario. We should have kind of settled right here and continued higher if London was, setting the mode or whatever. But typically London takes liquidity and sets the direction for the opposite side so they can catch, their profit, so they can continue on with this move if that's the scenario. And that's what we saw happen. We didn't get an engulfing and nothing really stand out for the sale, but just the fact of the matter that we didn't get any continuation. And I would say these bodies are not as strong. Right here, Tuesday morning. But still in all, with the fact that, especially with the NYC open, we didn't get no highs taken out. That alone probably could have just got you into sales. Also realizing that, London set the high for the market, took out the high from Asian, what they did overnight, tricking people into sales ultimately. They're running it up and taking the sell from up there. So only patience would have gotten to that trade, but if not, I guess you had a scenario here with this engulfing, it was far-fetched, but still the opportunity was there, I guess, to test these lows, which ultimately it did. But it was if you didn't take profits here, you would have been probably prone to be stopped out at break even, or if you would have just been holding to see if the market gonna break structure, you would have added probably more sales and then the continuation. But like I said, this is like an overnight sleeper scenario. Um, then from there, the market kind of just played into the consolidation because finally we got that breakout Thursday early during London. Had a nice little break down lower. The Lotus structured lows is like 65.09, 64.80. So it's about a good 20 pips, 30 pips. So not too bad, but it couldn't continue with structure to continue lower. And not only that, we had a strong reversal. Like the same bodies that took it down was the same candles that created the up move. So I would look at that as like a potential fake out. And it showed that it was going to be that scenario. But up until then, the main structure was here, or even furthermore here. And until we get a break above that, you know, we get into that trade. Otherwise, you would look for time zones, time ranges as far as when the market is open, when the session is open, to look for any type of rejection or just candlestick patterns. Like even though we look at engulfings mostly, but this is like a morning star setup, a strong bullish push, and get a pin bar, then a rejection, closing below the low of the first candle. That's the rule of that. Like it has to close below this candle. So you get scenarios like that that'll keep you out of thinking that the market is going higher when ultimately you could just be looking at the fact that why did we just continue high and create bullish candles, kind of like this did. See what it takes. Like it takes big strong body candles to push above structure points like this and this. That didn't happen here. One could say, yeah, we could turn around, retest, but typically when it turns around and retest, it's going to retest from a previously broken range. It's not going to dip back into the consolidation. So in this scenario, if it would have came around, it would have settled like right there. The market would have came this low and would have settled right there. Then we maybe would have saw some rejection wicks and then continue high. But that's not the case here. So the market sold off. Furthermore, getting people into sales, which it ultimately worked out, especially if you was testing this low here, just for targets. You at least got your TP1 or 2, depending on where you entered and how you was looking at your risk to reward. But ultimately, as soon as it broke below here, the market had pretty much the best scenario to retest probably here and then continue lower and create that structure lower. But that never happened. Ultimately, when we did come to this level, we did get a nice engulfing, but basically all it did was just fill in this gap area that we had, that we left behind from this run up. But where did it stop at? Right at a strong structure point. It didn't dip right back all the way down into here and testing these lows. Now it stayed right at that structure and it started developing bullish structure. And that's, I think, once this happened, I think that was news. It was out of there. I forgot what that news was Wednesday morning, but I know it was something important. If it wasn't a speech, but yeah, he was out of there. Any of these entries was good, but this was the push to let you know, okay, we're on the right side. We're really on the right side now, because it takes big body candles to break above strong structure points, what we needed in the first place. And right now, the strongest structure of all these is here, and the market retested to that area with some rejection wicks, and right now we kind of playing near that area. So like I said, overall, we're looking for the market to break below for continuation. If it's going to settle here and continue higher to match this one, who knows? But I'm not mad at the Bulls, though. I think they got a little bit more fight in them, especially with this break, the strong little break above here. Even though, yes, we did break back into the range, we didn't like settle here and then continue higher. But the same scenario is happening right here. So maybe this is just like an internal break of structure, just like this broke out. So who knows? We'll see. I just be looking at all different kind of potential patterns that can happen. So let's take a glance at the news. See if it's something we could use. Monday evening, 7:30, 8:30, Westpac consumer confidence and the NAB business confidence. Got news reports coming out. Nice. Tuesday, no news. Wednesday, CPI, 7:30 in the morning. Inflation rate. CPI, core inflation rate. FOMC, all on the same day.
That's gonna be our bullish push.
Right. Not facts. Yeah. You know, yeah, and then we got a double back at 1 o'clock with the FOMC on Wednesday. And we go double back with the continuation of the jobless claim, which has been going up, surprisingly. Also, shout out Mom, that's her birthday, April 11th. So we're going to try to have a bullish day.
Big facts.
See, the mom right there, PPI mom. That's what you call.
For real, but it's gonna be a fire 8 o'clock entry.
No, facts. Right when the New York Stock Exchange open. And then Friday, we're going to end it off with the Michigan Consumer Sentiment, 9 a.m. We're going to start off pretty modest Monday evening, but Wednesday is going to be the kicker. That's going to determine everything. Where are we going this month?
That's a fact.
Real talk. Where are we going?
That's amazing.
And what happened? Let me see. What happened last week?
Last week was amazing.
Yeah, I know. So last week. I know it was NFP, but wasn't it like a speech or something like that came out? Like Wednesday or Thursday, I think.
Yeah, Fed Powell did speak. He spoke, I think, Wednesday, and then
Let me see.
NFP was Friday.
Yeah, Wednesday. He spoke on Wednesday at 11:10.
Yeah.
Then we had jobless claims at NFP on Friday. Okay. So that's Wednesday. So let's see what Wednesday and Friday did last week. So we look at the charts. We have a 4 hour up. This is Sunday, Friday, Thursday, Wednesday. Wednesday. Bam. As soon as he opened his mouth, that was within this candle. So I could look at it better on the 1 hour. Bam. Right there. This is set up to New York time zone, so that's why it's showing 10 o'clock, but 11:10, that's when he said, good evening, or good afternoon. As soon as he said that, the market go crazy.
That's wild.
Yeah.
How many pips is in that one candle?
Let's see, we have 16 to 46. That's a nice, sweet, buttery 30 pips in 1 hour. And if you would have held, you probably could have pushed it. I mean, this is extreme, but if you would have got out at the top, that would have been a nice, sweet, buttery 100. But at least a nice, modest 60.
Could have got like a 75.
Yeah, 60, 75 easy all day. Just laying on the table.
Yeah, like I said, last week was pretty good.
Yeah, very nice market movement. So take a glance at Friday. Friday here with NFP. Bam, NFP took out the high, took out the low, consolidation. So that's proof. When Powell speak, we get a breakout. NFP, we just basically take out highs and lows from both sides. That's pretty much what I can see of the current range. It's going to at least do that. So can't wait to see what CPI is going to do. Really looking forward to that.
Yeah, CPI, inflation.
Yeah.
Yeah.
FOMC.
Yeah.
Yeah. So we got a lot to look forward to this week, especially midweek. So let's keep an eye on the overall movement. But what one thing I wanted to bring up when I had sent you that post on the ground with them charts, I was like, it was a good idea. And basically what it was just kind of like using the chart like a TradingView chart where you can write notes and put different arrows and yada yada, different just important notes and key points, key prices. And as the week goes by, you kind of just add to that and either one share it. I don't know if we can share it at least to where people can edit it or however the case may be, but still, it's basically just like a journal, but a visual journal.
Yeah, okay. Yeah, I like that.
And it's something you can actually look at and review as you grow along with it throughout the week, and then maybe Friday or Sunday you kind of look at it, just kind of see what your mind frame was. Like, oh, I'm waiting for this area to break before I get into a buy, and then it breaks, and then maybe you leave a note and say, okay, I bought right here, and I'm still holding, or whatever the case may be.
Right.
Yeah. But I thought that was kind of dope. Mm-hmm. Are you paying for TradingView?
No, not yet.
Okay.
Yeah, in the future, I can see when I'm doing this a little bit more.
Mm-hmm.
Yeah.
Especially with multiple screens and whatnot.
Yes, I can see this being worth it.
Yeah, bro, everything looking good, man. Overall, can't complain.
You can't complain. Like,
Can't complain. Oh, man. Can't
like
complain.
straight up.
Like,
No,
the
you
market
can't
is open.
complain.
Just like
Yep.
you said right there, market open. Like, how can you complain?
Stick to the plane and you can't complain. Like at all.
US dollars, um, big. I don't know what the hell it's saying. I can't even see. It's in a consolidation within a consolidation within a consolidation. Like, it's the more you zoom out, it's doing its thing.
Yeah, I was just about to say that. It's doing its thing.
It's doing its thing. S&P had a nice little pullback, doing its thing. Golfing.
Mm.
Mm-hmm. Every time else we had it engulfing.
We might get a little, a little
Every time
hesitation.
else we had a little engulfing. I don't know. I don't know. Especially that they broke out of structure.
Yeah, they said April is one of the months too.
Yeah.
Check that out. April, May, June. See what it be looking like.
Man, this is the last time the market broke structure, bro. Let me see. Let me make sure. Oh, no. Hold on. I'm tripping. I mean, that's crazy, dog.
So it had a little hiccup, not like a straight up drop, but
Yeah.
because this, this type of stuff is like made to always go up.
Yeah. Yeah. It wasn't designed to crash. I mean, not consistently crash. It's crazy. Okay, it's amazing to watch though these all-time highs being created. Bitcoin just chilling above 69, like it's been there for years. Like I've been here. I'm good.
Yeah, that's like a priming.
Nah, facts, boy. That's like about to explode. XRP chilling in the incubator.
Yeah, XRP had been getting uglier and uglier. Like the chart been looking nastier and nastier, bro. I'm like, man, what is going
Cause
on?
it ain't all this. This is some news that came. Well, no, this is 2023. I'm tripping. It was something
No,
recent.
that was it. Yeah,
But that was last. That was July last year. Something
yeah. That's
happened.
when they. That's when
Oh,
they
that's
got
when they
like,
won. Yeah.
yeah,
But you see. But the only thing I can say, structure, lower high, lower high, lower high. Like structure still being built. So even though it's looking ugly, we still got structure being built. But it's weak though. I'm gonna give it that. It ain't strong because
very,
from here,
very,
this
yeah.
whole range, it just did this and there. Like it ain't break nothing. Kind of like this structure is breaking levels, breaking levels. Like yeah, this weak as hell. I don't know. I think it's. I don't know what to think. Shit, I'm not about to say nothing. The only thing I do know, they about to have a stable coin supposedly this year.
Yeah, it's gonna let you know what it's gonna do.
Yeah,
You know.
it's supposed to be based on the dollar, which is like what they do. The dollar is the greatest thing in the world. But yeah, man, we'll continue to monitor this and see how we pan out throughout this week. Keep each other updated. Keep the Telegram updated on the news that's gonna release.
Yeah, man. Stay
Stay
stay glued
abreast.
to it. Like honestly, this might be a nice little a rowdy week on some shit.
Oh yeah,
Um,
definitely. Okay.
I would be patient and probably look to enter after the dust settles on Wednesday. But then again, you got Thursday coming, so that might can shake somebody out. Um,
Okay.
and then Friday is Friday, so this could be one of the ones you can sit on the sideline and see what it do for the week.
Right.
But yeah, I got my eyes on this bullish movement, so I'm looking for some weekly wicks to be filled. Like I think it could be some big volume coming.
Weekly wicks to be filled. I like that. I like that a lot.
Yeah, so
I like it a lot. Well, we're gonna keep an eye on it. Keep
big
everybody
volume.
updated, man.
That's a bit.
And we're gonna tap back in on Sunday next week to see what exactly happened. Did that weekly wick get filled?
That's a fact.
All
We
right,
will see,
brother.
man.
I'll holler at y'all. Peace out, man.
Peace, peace.